What's up, everybody? Welcome to Money Market Truth. I am Mark.
This is Mo from OTB Clubhouse.
Hopefully, you guys had a great week. It's been a busy week, Mo, hasn't it? We got the earnings that just came in. We had Microsoft. We had Tesla. What's your thoughts on the Microsoft, by the way? Did you expect it to pump up like that and then just sell off?
Yeah, I think there's a lot of things happening with the market. A lot of funds are rebalancing, and that's what we're seeing. There's a lot of volatility, which is why a lot of experienced traders are just staying out of the market for the week.
Yes, I definitely did. I will say this. You guys have seen my portfolio before. I did sell all my shares of Google for a small profit. I actually think it might head down to the 80s, and that's why we're reestablishing my positions right now. But I took profit on that one. No longer going to just sit there and let my stuff go super negative, especially in this environment. So I got several companies right now that are over 10%. So I'm going to make sure they don't go negative. You know, it's a risk. I know you're supposed to be a long-term investor, so you're supposed to hold even while the market goes down. That's what they say. All right, let's get into today's hot takes. The first thing I want to touch on is political landscape of things. As you guys know, we've covered it multiple times, mostly because it has to do with money. So let's pull this up. I don't know if you heard about this, Mo. You know, we've spoken about this before multiple times. You guys know my background is military and I have an intelligence background. And United States has been basically pumping money into this Ukraine-Russia war. So essentially, it really is a war between us and Russia. It's a proxy war. We're using Ukraine as the pawns for this. I was really proud of Germany for a moment because I'm anti-war. I don't believe that we need to constantly be in a conflict. And, you know, when this whole thing first started, Biden came down, went to Europe and told Germany and all the other European countries to no longer accept oil from Russia and that they would figure things out for them, right? So I was really proud of Germany the other day when they said they're not going to send any tanks over to Ukraine. And I was like, it's about time. It's about time they put their foot down, right? And the United States already had declared they were planning on sending about 15 tanks over there. I'm sorry, 30. I think it was 30, or was it Europe? Let's just see right here. Biden announces 31 Abrams tanks are going to be shipped to Ukraine. And they asked Germany initially to send some tanks, and they said no, but it looks like they backtracked today. They announced that they will also be sending over tanks to Ukraine. With that being said, Mo, do you think that this even affects the market anymore?
It does. I'll tell you something. Just take it with a grain of salt because you know more about this. I heard from a friend who works at Wall Street, and one of the things he said was Russia is waiting for winter to be over. They are working on something. So I don't know how much truth there is to it. It could be just a rumor, but I don't think this is over. And I don't think US or Russia are aimlessly just spending money. Something will get escalated here.
Yeah, I will agree with you to a certain extent. So I definitely think that the market hasn't been reacting to this as much as it did initially last year when this whole thing first popped off. It kind of just died down. It seems like people are just like used to it now again. It's just part of life, right? Just like we've been in a war since 2001, you know, shortly after 9/11. We've been in war ever since then. And now we're basically inserted ourselves into another conflict. And as you know, the United States makes a lot of money off of war, the military industrial complex. It is a thing. And I was looking through Twitter and I noticed that some people were asking questions about where they should invest their money when it comes to leveraging the situation of conflicts that we're in. Because let's just be real, we're going to probably forever be in this conflict as well. I don't think it's going to end anytime soon. I think this is going to be years until this even ends or until some sort of resolution comes. So I want to talk about some of the stocks that you can actually invest into when it comes to the military industrial complex. And I want to talk about what you could have done last year. I think a lot of these stocks right now are at the all-time high, so I wouldn't recommend actually investing into them. But these are some of the companies that you could have invested into, such as Raytheon Technology. If you look, their 52-week has returned you 10.74%, and a 5-year period, 25%. Not bad. They're relatively kind of sideways moving stocks that slowly progress up. They're not too aggressive. Then you have another one, which is Lockheed Martin. Also, the 52-week high, it's up 17%, and the 5-year mark is 27%. Northrop Grumman, which is actually a pretty good company within the industrial complex. That one also has returned you 14% in the 52-week high, 52 weeks, and in the 5-year is returned 36%. L3 Harris is another one. This is the one that's probably been, this is the second most beaten up one out of all of them. And I don't want to talk about L3 specifically, but it's down 11.93% in the past 52 weeks. 5-year mark is up 24%. And then Boeing, which actually had earnings a couple of days ago, and that one as well has gotten beat up pretty bad. 52-week lows only up 4%. And the 5-year mark is actually down 39%. But if you, let's say you don't want to invest specifically into individual stocks, which again, you don't want to buy all these different stocks and you don't know which one's going to take off and which one's not. There are 2 ETFs that you can invest into, which is the iShares US Aerospace and Defense ETF, ticker symbol is ITA. It's currently pretty much at close to the all-time high. The 52-week high is 114. It's currently at 112. But if you can see, the range is between $91 and $114. So it didn't take a major hit, especially during this bear market. And then the other one is Invesco Aerospace and Defense, PPA. That one's range has been $64 to $80. And again, it's close to the all-time high. Between the two, I would honestly say, which I'm not going to invest into any of these. So just full disclosure, I don't invest into the military industrial complex. It's actually kind of hard not to, but I don't specifically target those type of companies and stocks just for integrity reasons and moral reasons. Like I've dealt with all that stuff. I do not support war. And it's unfortunate that I'm starting to see a lot of people that I supported back in the day, especially during the Democratic Party, like Andrew Yang, who's actually supporting this right now. It's just a sentiment, the media has pushed it out that you should care about Ukraine, and Ukraine is the innocent one, and Russia is the bad one. So therefore, we're going to send as much money as we can to Russia. But when it comes to the two, I would say honestly that the ITA I like a little bit more because the expense ratio is a lot less and the yield is a little bit more. So that one does probably benefit you a little bit more if you decided to invest into it. But let me go pull up this chart real quick here so you guys can see my trading view chart, which I would like to share. If you look at this chart just on a technical level, what do you see, Mo?
So you're on a long-term, is it a daily chart? Long-term daily trend line?
Yep. And where is it sitting at right now?
Based on, I'm guessing it's probably a demand zone. Daily
demand zone. It's a demand zone. If you look at this trend line that I have going all the way back to 2017, it seems every time it touches that line, it kind of bounces off and it's significantly oversold. But you got to look at the fundamentals. The fundamentals are not the greatest right now on L3, but just looking at the technical levels, this one actually looks like a pretty high probability bounce here, especially currently.
Could you add 200 MA instead of, could you?
Sure. Yeah. They're all under the 200 MA as well as the 150. But yes, let me go throw it on here real quick so you can see it. It's the yellow line. Do you see it? It's right up here. So the 200 EMA or MA is 228, $228. So it is way below 200. But as you can see, it has fallen below 200 quite a few times, but it seems to respect this trend line. So we'll see. Right now, it fell a little bit below it, but it did bounce up a little bit today. So we'll see how this plays out. Now, again, I'm not recommending anyone buy that, but if you're interested in the military industrial complex, take a look at L3, see if you like that risk appetite. And if you just want to get exposure all over, check out the ETFs. If I would be a person who would be interested in this sector, I would stick more to the ETF versus the individual stocks. So that's all I got on that, Mo. You got anything you'd like to add?
No, I think it looks good, man. I think it's a good hedge. People have been telling defense stocks have proven that they are doing really good. But you're right. They are awfully extended. Unless there's a full-on war, I don't see the risk reward except the one that you mentioned, because that's a lagger, right? So you're basically hoping that's going to catch up to the leaders, and that itself should give you based on the chart you've shown, about 30 to 40% move.
Yep, exactly. So that's all I got. Just want to cover that for you guys. Since we have covered the Ukraine and Russia war and how it ties in money, just expect to see that this current administration will continue to pour money into this war. It really has. I think at this point, last time I checked, I think it was like last month or so, we're close to $60 billion that we have invested into this war so far, and we will continue to do it because I'm pretty sure I saw something in a budget where there was some money also allocated towards the Ukraine war. So we'll see what happens. Yeah, but that's all I got today for you guys when it comes to the hot takes. I'm not going to talk about Tesla anymore right now for a while. You guys saw I did a hedge, Mo, $65 put. I got 300 days to be right.
Here,
We'll see what happens.
we don't have to talk about it, but here's I know you love this chart.
I do.
Um,
I love this chart. You guys should check out this person. It's what's it? It's like
it's
app
called App Economy Insights.
app
The
economy.
Twitter handle is Economy APP. We're not affiliated. We don't get paid for sharing this. We just bring up good work. You want to follow them, good. I don't think it's a subscription. I think it's free. But here's a quick look at how they did on earnings. Honestly, it's impressive. And I've continued to say that Tesla is going to fall, not because something awfully wrong with the company. It's just a lot of cash is in the company, so their PE ratio is too high, the valuations are too high, and when things get really bad, the companies that are the most bloated are the ones that drop the most. So Tesla was one of them. Apple and Microsoft will be next. So my target 65 to 68 still remains on Tesla.
Same here. And I know I keep getting back and forth arguments with people on Twitter. And listen, I'm just gonna let it go. We'll see how it plays out. I put my money where my mouth is, so we'll see how this plays out. My biggest thing I do want to mention here is I love this chart because it will show you exactly where they make their money from. And looking at this chart, Mo, where do they make most of their money from?
It's not tech, so it's not. We can't call it a tech company. I know that's where you're getting at.
Yes. So that's all I'm saying. Just look, it's still, I understand maybe in the future things may change, but right now, for the next 3 to 5 years, I'm pretty sure it will continue to be vehicles as his major selling point, as well as the EV credits if they continue to lower their prices. So thank you for sharing that. But that's it. We're no longer going to address any more Tesla. Last I checked, when the earnings came out, it was very lackluster. We'll see what happens here in the near future. But all right, Mo, you have a guest. This is the episodes where we bring on a guest.
Yeah. So let me give you a quick backstory. We've done multiple episodes. We've hosted a couple of lives. We get a lot of questions around how do you grow a small account? What are some of the good behaviors of a consistent trader? And I think I've done a lot of seminars on them. I've given a lot of knowledge, but me and Mark thought, who better to bring than a consistent trader? And I personally have seen his journey for the last 3 years, from starting on a small account and then having that struggle where we all go through it, where it's like 2020 was super easy. So it's like a boom and burst way where you win big and then you lose big. You kind of don't know why the trades are working or not working, to now coming in the 3-year mark where the person's been a consistent trader. And not only that, they run a full-time business, like a full-on proper business, along with they have a family, they have a kid, to being a consistent trader. So it's easy for me to talk about what you should be doing, but it's better to bring someone on that learned from zero all the way here. They don't have any professional background in economics or trading. So we're going to bring on our guest. His name is Amit, and I've known him for 3 years. And this is sort of what I call a definition of someone who had nothing in terms of knowledge for options trading to now becoming a consistent trader. So,
Okay.
all right,
hey guys,
welcome, Amit.
Thank you for having me.
No problem. How have you been?
Good, not too bad. How are you guys?
Not bad. So we'll get started. The first kind of question is, I believe you started in 2020. That's correct, right?
Correct. It was around the time COVID happened is where I started to explore options trading and trading in general, actually.
Yeah. I think back then I was setting up my Twitter. I had like 7 followers and I was posting a lot of stuff, and I got a couple of people asking me questions, and that's kind of how we started talking. Correct? That's
Yeah,
what happened. Right?
yeah. Actually, I'll turn back a little bit. What I started with was I was like, okay, this seems interesting. I just basically Googled how to trade on, not Google, sorry, how to trade on Twitter. And going through that, I actually stumbled upon penny stocks in the beginning. And using penny stocks, didn't know about the volatility, got lucky. It was basically a gamble, and you start to make money and compound quickly. But then all of that kind of started to disappear very quickly. So I was like, okay, well, what can we do here? I heard something about options trading, wasn't familiar at all. Started to dig around options, and I did come across Mo, and I reached out to Mo and I said, hey, I'm interested. I'd like to know more. And that's how it kind of worked my way from there. So
So, a lot of people. Go ahead, Mark.
Sorry, can I ask a question real quick? When you first came across Mo, this is like a running joke that me and Mo have. Did you think he was a scammer, like an Indian scammer? The way his
No, not
IG was set up?
that's funny. No, not at all. Actually, I actually reached out to him, and I remember the first meeting that we set up. I was a no-show to that meeting. I think we both had a couple of assumptions there. One was just, maybe the guy's just not interested or he's a flake. Not
Yeah.
Mo, myself. But then I reached out to him again. I'm like, give me another chance. I have a reason. Then we got to talking. I didn't really have any uncertainties. I did follow a lot of others in the very beginning, and just kind of you go with the crowd and you try to figure out who's reliable, where the source is coming. And even to this day, you still realize people are out there. There's a lot of pump and dumps. There's people that scammed a lot of people out there. You just gotta figure it out for yourself, essentially.
So like you worked a full-time business, right? You have a family business and it's a good business and you're doing fairly well. Most people I've noticed that were getting in were either people that were getting laid off or they had to work from home. So they were like, yo, I'm done my work in 2 hours. So I'm looking for other ways to add revenue. What was your itch? Like, why did you want to learn a new skill?
So I think that's a great question. And it goes back to just, I always like to explore different opportunities. So my background is actually, I'm a software engineer and I have my master's in business, and I did consulting in the corporate world for about 10 years. I was a private contractor, and through some unfortunate, sad situation that happened in my family, I had to let that all go, and I am now a partner in the business that I do run. And in doing so, it gave me the opportunity and the flexibility to venture into generating additional income. And I looked at a lot of different options, and I thought trading would be something that would be interesting for me, considering I do love tactical methods. I love problem solving, and I gave it a chance. That's essentially where it is. I like the way that you can use the market to leverage as long as your risk is in control.
So like I remember when you first started, it was a lot of like, let's put in money in Tesla earnings or let's go out to money calls. Like there's a lot of that. So like what was the thought process when you started? Was like your risk tolerance really high, or like how did the first, I'd say 6 months, because those are your biggest learning curve. And I like
Yeah.
one thing I'm not even sure about, did you start options trading with me or were you already doing it, right?
I was already doing it. And I was still learning. So to be honest, I didn't even know anything about support, resistance. I was following callouts. I was following callouts, and Mo's aware of who it was. I won't mention a name, but based on that, I realized things like low floats are a no-go. The spreads are too thin, and those are things I learned. I think the largest learning I've had is through Mo. He's been the teacher that helped me gain my track again. I think in the beginning I was kind of, when you got a lot of things in front of you and you're just trying to hope and things hit, and then you're like, okay, great, it hit, and then you go to the next one, and next thing you know, it's all gone, and then you have to try it again. So a lot of failure in the beginning, a lot of as they say, the market, you have to pay a tuition before you actually start to really gain traction. And I think that's a big lesson that anybody, for a new trader, that you have to be willing to take a risk to see the situation change in the long term. You won't get it right away. Sure, you may hit some great plays, you may hit an earning or two, but you'll give it all away in the end if you don't know what you're doing. I think that's a very big lesson.
So I've been part of other groups. I've been an admin. I've been open about it. So I don't think it's anything about me or anything to do with me. The execution was done by you. So what really changed in you? Like there has to be a part where like I get these messages still. I get it now. They might still not be profitable or still not be consistent, but they know at that point that they know they're doing something wrong. And then
Yes.
that's one point. And then the second point is I get it. And then you get that curve up. Like there's a trend reversal, I would say, in how you get a chart trend reversal. That's what happens with us too. So at what point did you realize you're doing something wrong?
when I remember in the very beginning, I did blow up my board. Not gonna lie. Once I did blow it up, and I think that was a lesson there that what you have to go back and you have to evaluate what have you done, right? What have you done? Why'd you do it? What is your reasoning? I think the biggest thing that I learned is what is your why and what is your reasoning? Why are you in this, right? Are you in it to gain additional income? Are you in it because you're struggling in other parts of your financial life that's why you're doing this? And that wasn't any type of reason for myself, but like in general, if you are struggling and you're trying to find an easy way out, this is not an easy way out. And I think that was one of the biggest lessons that I learned very quickly was this is not an easy thing where you can make money quickly. There's a method. You have to make it boring in a way where it's a systematic approach. And I think I learned that from very hard lessons, right? You can't just full port things. You can't hope. You need to know where your entries are, where your exits are. What are you actually doing? I think that from that perspective is where I did learn a lot is, just failure, learning from failure.
So how did you analyze you were doing it wrong? Like, you said what were you, like, give me specific steps. What did you do?
Okay. One was I went back. All right. Why did I enter? Let's say let's just use earnings, for example. I remember I played a long time ago. I played Amazon. It was Amazon earnings. And this is actually right before I met Mo. And I was pretty down on it. Amazon earnings, I think I played it and it went to 0. And I had put in, want to say something crazy like 5 to 10 around there. And I reached out to Mo after and I was like, yeah.
Wow.
Yeah. And I reached out to Mo and I said, hey, like, this is what happened. How do I make this back, or what do I do to make this better? And that's where we started to talk. But I thought I started to take things a little bit more seriously and try to understand that there isn't this whole this thing had to unlock in my head. Essentially, it was like, hey, I can't just throw money and be like, oh, it's gonna go up, or hold it for a long period of time. Where my mentality changed after that is actually wanted to learn. I didn't want to just go and put money towards the market. It was more like, okay, I need to learn how this is done. What is a sport? What's a resistance? Supply zones and demand zones. I'd say that was one of the biggest things I learned, and that was from Mo. Like when you did all of that stuff, supply zones and demand zones honestly have been a lifesaver for me in general. And at this point now, I can actually just look at a chart and I know exactly where the supply or the demand for the most part is. It took a long time to actually get that in my head and ingrained. It's a lot. Once you learn that type of process, it's a lot better. Now it's all about risk management, right? So now it's taking your approach. Okay, what is my goal? What is my why? Where am I going? The trajectory. What I've noticed for myself is if I look at the overall results of what I want in a year, it's too overwhelming. But if you break it down into segments of 2 weeks, then a month, then 2 months, then 3 months, it makes things a lot easier. And your picture, actually, that big picture becomes much more clear. Those are the types of lessons I've taken from all of this.
Can I ask you some questions here real quick? Can I interject there, Mo, for a second?
Yeah.
Now, you said when you first started and you went in there and started trading, did you even learn the basic fundamentals of options first, or did you just go in there full force and was like, oh, wow, yeah. Okay, so you didn't understand theta, gamma,
Nothing.
delta? Wow, okay. And then you said you blew up your account. If you don't mind saying, if it's 2 pesos, like how much did you end up losing when you blew up your account?
25,000. Yes, correct.
What made you continue after that? Because that's a lot of money.
It is. For myself in general, it was. I actually have that inner need to fix things or to understand what went wrong, and I think I've always been that. It could be my engineering background or what have you. Figure out where things went wrong and how we're going to make it better. I love to learn. I think that's one of the other things. I didn't want to give up, and I'm glad I didn't. I did hear that from a lot of people, be it Mo, be it other people I've spoken to, that at some point it turns around, and when it does, like, you know, you'll be glad. Just have to be careful. You gotta, you know, I don't think I took that as something where it was like, oh my God, my life's over, or, you know, I have nothing from here. Like, I think it was like, you know what, having a business, understanding that there are losses in anything you may do. You have to just be comfortable. I think you have to be comfortable with risk. If you're not comfortable with risk, yeah, this isn't for you. That's a given for sure.
Because it sounds like you don't really have an emotional attachment to money, correct? Because that's
Not
like, I know a
really.
hurdle yeah, see, that's a hurdle that a lot of people have, like myself. Like, one of my biggest issues is, and Mo knows this, it's my emotional attachment to money. And I don't know if
Yeah.
it's because I grew up like almost borderline broke, or what, or just my fear of losing it. And I know a lot of people actually get into trading based off of desperation, and that's probably one of the worst things to do, because, like you said, like, you lost 25,000. A lot of people may this be the only thing they have, and they lose it, and then they're like, man, like, I just blew everything that I worked up to on
Mhm.
a trade, and then, you know, then they get upset and blame others, and et cetera. So that's got to be rough. Wow.
Yeah.
Kudos
But
to you, man. Kudos to you for continuing. To be honest, wow.
thanks.
Yeah, like I think the risk tolerance part is big, but I was talking to a couple of people and they said like they come from a sports background and for them losing is not cool. Like that's something where like if they lose, that's where their mind shuts off. Like it's not like, oh, every L is a lesson. No, it's not like that. They don't lose kind of mentality. And I still have those people in the group and they talk about it. They're like, that's something that we constantly fight. That they could have 10 wins and 1 loss, and that will throw them off. Like it's actually gonna piss them
Mm.
off. It doesn't
That's
really
me.
matter what the amount is. Or like if they could have made $1 million and then they lost $100. It's that $100 is gonna piss them off. And I think that's their projection of what a loss means. And it could be something behavior when they were a kid, by a coach, by parents. And like, I'll tell you something really funny. My kid, he's only 5. He came to me last week and he goes, I only take W's, I don't take an L. So,
I love that.
and I had to like sit down with him and then had a whole, he's only 5, but that's what they're showing on TV. That's what they show on YouTube. That's how they talk at schools these days, and that's what
Yeah.
we hear in our music, right?
Yep.
That's the culture.
All you
And
do is win, right?
every successful person has gone there with a set of failures, and that's how they got there. Think about this. If you won a lottery, did you learn anything? But if you went broke, bankrupt, lost a job, got laid off, got fired, that's where your biggest lesson came from. And that's how I think. I think 25,000 is a lot amount. And I'm telling you that I've lost more before it actually made sense for me. And at that point, it's not that you really don't care about money. It's at that point you think about what's left. Like, why am I going to do what I'm going to do? Because imagine telling your wife you lost 25K because the support didn't hold on a daily. Right?
Yeah, that would be fun.
And that's why it's important that you have people. And it doesn't have to be a Discord group. It could be someone you know anonymously or met on Twitter, like someone who could understand. Even if it's like getting a therapist, like I don't care, because a lot of mental trauma comes to traders because they don't know who to talk to, because a lot of people are ingenuine because they don't really lose. And we've talked about it multiple times, Mark. Like a lot of people are like, yeah, I don't lose, even on Twitter, bro. There's people saying 90% success rate. I don't lose. You listen to that book, Market Wizard, and the person who trades about $400 million in commodity, he goes, we hired 40 people and we tried training them. Okay. We tried training 40 people. These are world-class traders. They're teaching with the best algos. And they said we were only able to teach 2 or 3 people out of the 40.
Wow.
So, and that's what tells you like that's the reality of the situation. Most of us got into options trading for the wrong reason. It was easy money and fast money, and so we were
Yep.
set for failure to start with. The first course I bought was a $40 course that taught me how to buy straddles on earnings. That was my basically my way of making money. And the person said they made 20K doing that. And I'm like, cool, I'm going to do the same thing. And I lost, I think, both on calls and puts doing that. And I have zero clue on the Greeks. So what I would do is I'd be like, okay, so I only have $500. I knew a little bit of risk management. My budget's $50 because I'm new. So based on my budget, I would pick a really out the money call or put. Back then it was just call. And if I lost, I lost. If it worked, it worked. It was sort of like you're at the blackjack table and you've got $100 and the minimum bet is 25. That's what you're taking. That's sort of what I was doing. There was a point, Amit, where both you and me were big on leaps, right? There was a point, and so what happened?
That was a pretty big lesson there. I remember that. Go ahead.
No, go ahead. Talk about your experience.
I remember with AMD, this was a leap that looked like a very high probability play, and it did turn out in the very end that it was. It was a high probability play that started off. I believe the premium was at like something like 16, 17 a contract.
Yeah.
And we started adding, and the market definitely pushed that leap down. It went from 16 or 17 to about $1 or $2. Is that correct?
Yeah.
From what I remember. By then I had exited the position. And I remember sharing my frustration with Mo on the fact that it was just just dumbfounded that that AMD was just not moving. It was just getting absolutely pummeled down. And in the end, if I had held those, that would have been a 6-figure trade for me by the end of the year. But it didn't work out, and that's okay. But my losses were recovered in other plays that I did, and that loss wasn't as extensive as the other ones that I was a part of. The one main loss I ever had. But I'd say a lesson like that lesson I learned from there was that a leap doesn't guarantee that you are basically safe. The leap that we were using, that's where I learned things like market makers will burn the theta on it, will burn the premium. If the large block buys are in there and somebody sells their position, right? That next thing you know, that $17 contract can go to $2. So you just have to be very well aware. A lot of risk management came from that. I learned a lot of risk, how to handle your risk, not to be over leveraged in things. Play it day to day. You want to be able to survive and not just hope and pray. And I think things like that have made a lot more sense now. And whoever's out there right now that's learning, struggling or frustrated, I would say the month of January so far has been a very frustrating month in 2023. Even for myself, the gains I'm accustomed to, it's been a lot different. And I'm okay with that. The year's long. It's just a matter of getting through all of this. The Fed pivots. Now it's earnings. Next week is FOMC. So you just have to give the time what you're looking for, and you need to know. You have to manage your expectations, and I think that's a very big thing. If you are in an urgent need to generate this income, then you're in it for the wrong reason.
That leap that you got in. So a lot of people who may be watching this, when people say leaps, they may just be familiar with like the Come Up series version, which is 2 years. But leap actually could mean anything from 6 months to a year or more. So my question is,
the official definition is anything over 12 months is a leap, but we use it casually for 6 months or over. Mark, the leap he's talking about, I could tell you it was a $90 AMD leap we got it on January 2021 for January 2022, and it was a $90 strike price. That's when AMD was, I think, $90 or $100, and it was just going from 70 to 90. So it wasn't actually going down. It was just doing 70 to 90, 70 to 90. And in my head, I was thinking, just because I bought time, it means I don't have to make the decision now. Not that it can't go down. I have time. And that was my biggest lesson, that doesn't matter. Time doesn't matter. Your stop loss comes before the time. So Go ahead, Mark.
Okay. No, that's why I was just wondering if it was like 2 years out, or if it was 1 year out, or it was 6 months. I just want to know what the time frame was according to what you're talking about. Cause I do remember that was cause AMD was rough. I mean, it dropped from it went all the way to 150 at one point down to 60.
Yeah.
So it's
Yeah,
yeah, that was definitely a volatile one, a scary one for sure. Yeah. So, but yeah, like you said, had you held it, you would have made money. But
absolutely.
it's hard to when you see a $17 contract go to $2. So it's
Yeah,
scary.
I was
Yeah,
well before then, but yeah, it was
yeah.
interesting to watch it in the background for sure.
Yeah. Go ahead, Mo.
Would you say 80% of your plays, 80% of your profits came from 20% of plays that you made?
Yes, I would say that's a very good estimate. Most of the time now, uh, you know, I look at what my theory is for the day, and based on that, using zone supports, resistances, and the guide of the Discord, I make my judgment. I may, if there's multiple callouts, I'm not following everything just for the sake of my risk tolerance. I will make a judgment call on whether or not I want to get into the play or not, and there's a reason for that, right? Because I'm not looking to go into the market and be like, yeah, I'm making $20,000 a day or I'm making 5K a day. That's not the reason. I'm going in and I'm like, okay, how can I be profitable today? What is the best situation that I can put myself into? And that's a lesson that took time, because I think in the beginning, even when I did join most Discord, I was taking every play. It was literally like, and because uh it wasn't because, like, oh, it's a guaranteed play. It was because, oh, there's a play. Well, shit. I remember one time driving and I pulled over so I could get into the play. And those kind of lessons, because in the end, was it worth the risk? Probably not, because I when I went back, I'm sure the premium probably moved down a little bit, then it came back up a little bit, then the next day, right? Like, it just, you got to get that out of your head. You got to be like, okay, what am I doing? What is my personal goal, and what am I trying to accomplish here? If you can't build that out in your head, then I don't think you can ever be successful in options trading. You need to know yourself before you can actually, just like anything else. You need to know yourself before you can be in a relationship. You need to know yourself before you can actually trade in options. Is where my thinking and strategy comes from.
Do
So
you
go ahead.
no, okay. We keep interrupting each other. Would you say that at what point did it click for you? Like at what point did the switch turn on where you're like, okay, I know what I'm doing wrong. Let me start doing X, Y, and Z and stop taking these massive, stupid risks. Was it within a couple months, a year? Like, at what point did you know,
I
like,
would
this, I
say
got it?
I would say like it took me about a year, a little bit over a year actually. I think it's it's hard for me to actually give a time frame, because it can happen. It could happen to somebody in 2 months, and it can click and be like, oh shit, like I don't want to do it like this, or it could take you a year. I don't know. Like, from my experience, I couldn't really put a time frame on it, but I'd say probably about a year or 14 months. It took me to actually start to learn that, like, hey, you don't need to do all of this. You need to you need to take a step by step approach. Even once I think even I think Mo mentioned earlier that, you know what, hey, you can say, hey, I got it, but then when you get it, you're still doing the repetitive
Yeah.
process of making those errors, and not as extreme as my first error, but you're still making those errors, right? But like that, those errors can be minimized based on your charting, based on your levels, based on your understanding of what you're doing. And I think that's where that was, that first lesson was a harsh lesson. The other lessons were minimal, and then I started to turn around where it was like, okay, those minimum losses are now turning profitable. And now I'm like, okay, I like the fact that this is not red, it's green. How do I keep it green? Why do I want this? And I keep going back to my personal motivation, right? What and I think that's a big key thing that I hold close to me is, every day I wake up and, okay, what is my why here before I even start the day in the market? I don't want to be going in blinded and be like, oh shit, I got to run after everything. Market gapped up, I got to run after it. No, like, what's going on here? What's the market saying? Right. So I think, I have my overall, weekly goals, or have my monthly goals, and that's all I strive towards now. And I think that's a very helpful method on my end that helps keep me in control. Even today, if you take the market today, yeah, it gapped down. I entered a play, and I exited once I saw the profit that I was looking for, and the market just kept running. I didn't expect it to be a trend day. I go back and I'm like, well, shit, like it could have been this. And I think that's another thing that over time I've stopped doing. I remember in the beginning it would be like, oh man, like if I held, it could have been this, and that whole unrealized potential really messes with the whole mindset. And I don't think we can ever be happy that way. And in general, I'm just, yeah, take it one step at a time. Okay, I've accomplished, maybe, let's say I've accomplished two fifths of my goal for the week. All right, so now what do I need to do with the funds that I have to accomplish and get to that end goal for the week? If I don't hit the end goal, let's go back and reevaluate what I did, or what I didn't do, and what was the market doing. Have I accomplished enough based on what the market did, or have I did I miss out on some large opportunities? And if I did, what was the reasoning why? Was I busy at work? Did I just not have the time? Was I scared of the market? Things of those nature is what I like to do now, and I think it helps just keep myself balanced.
All right, so I have a question for you, and probably the most important question. This is what a lot of people struggle with. There was a time when I think you were kind of like, this isn't making sense. It was inconsistent, and you took a break. And I
Mhm.
clearly remember. So you like went quiet, I think, for a month, and
Yeah.
then you came back and you started trading, but you were trading much smaller than what your usual size is. And
Yes.
because I remember, and then I think you did 2 months of that, and then the third month you had the biggest month of your life.
Mhm.
And so
Yeah.
so how did you go through the loss, and like what made you come back, and like why did you decide to start small? Because most people do revenge trading and they usually go bigger.
Yep. So basically, I think that was, I don't even remember when I did that, but I do remember that I stopped for about a month to 6 weeks, and I
Yeah,
had mentioned that I need to step away, and I need to figure out my strategy. And I think I did that recently too, in December.
yeah,
Just and there's nothing wrong with that. I actually use that habit a lot from back in the day when I was a software engineer. If I was coding and I couldn't figure something out, I'd step away and I'd come back, and everything would kind of work itself out. So the same strategy: step away, don't even think about it. So I think the first 2 weeks I didn't even look at the market. I didn't think about it. I left it alone. Come with a fresh mindset. Okay, what am I trying to do here? Where am I going wrong? I actually even refreshed and rewatched the course around supply and demand. Got an understanding of where am I going wrong. Um, and then, yeah, like when I did come back, I wanted to start small. Small wins will actually increase your confidence. Even now, being a bit more of an experienced trader, being a lot more consistent. Um, some days I just don't feel like you know putting in a large risk amount. I'd rather put with a smaller risk amount and feel good about the fact that I'm finishing green. But when you're doing that, when the opportunity does arise, I feel like it's a lot better that you have that confidence where you say, you know what, this looks like a plus trade. This looks like an opportunity where I can actually put the risk on. Whereas I think when you start to compile a lot of losses, or your first day is one loss of one, then a loss another one, then a loss of two, then a loss of four. Well, oh shit! Now all of a sudden my account's gone from here to here, and I'm kind of at a loss of words here, right? Like, well, how am I supposed to get this back? That's where the revenge train comes from. So I think making those consistent gains, be it small. I've had days where it's like $5, but then I've had days where it's 5K. But like totally depends on the day, and it depends on my overall strategy. So I think stepping away is also very key. If you stepping away, but I think your other question was like, why did I come back? I think this has actually helped me create another income stream that's been very useful on my end, and I don't think I'd ever let it go. There's a reason for it. I'm knock on wood, I am successful in it, and I'd say that it's something that I'll keep striving towards. I think it's a way to create financial freedom. It's a way to create hopefully generational wealth in the future, and the more I learn, I would say that there's also a lot of learning. It's a continuous learning, and I love that. It's not just like, oh, I got supply and demand down, and now I'm good. Yeah, great, you got that down. But learning about premium movement, learning about FOMC, learning about these data points that come out, and I had no idea. And I think I've learned a lot about that in the past year, which has also helped. Do I want to play on a FOMC week? Do I want to play on an OPEX week? Things like that, I don't think I was ever aware of. And you wouldn't be if you're not a part of a Discord or you don't have mentors in this. You would play that week and you probably get destroyed if you didn't know what was going on. And I think that's very key too.
All right, Mark. I think I asked all the questions I had. You can.
Yeah, I got one more before we change over to the next topic. What I hear you say here is that you are considered a successful trader, but you also still have your business, correct?
Correct.
So you did not just decide, hey, I'm doing good at this, so let me close on my business and become a 100% full-time trader.
No, the business is a family business. My father started a long time ago. But yeah, it's a 25-year business. It's up and running. It's doing well, and yeah, I don't think that would ever disappear at this point. You never know in the future what things bring out in the world, but that's something that is more of a legacy that's built in my family, and I'd say that's also a driver for the fact of finding other ways to generate wealth.
Mhm.
I hope new traders or people that have been trading for a long time, yeah, just be consistent, but know your why. Understand where you're coming from, and follow your rules. I think that's a very big one too. You got to have rules in place. If you don't have rules, it just doesn't work.
I mean, do you think because you have a job as well, that also kind of alleviated some of the stress that you could have possibly took on had that just been your only form of income?
I would say so. Yes, I would
Okay,
say
good.
that definitely does. Yeah, yeah. Could you imagine if that's all you had, and you're going full-time trading, and all of a sudden you're racking up big losses? Yeah, I think it'd be much more stressful. Absolutely.
Dude,
Yeah.
even one day, forget days. Like, I'm telling you from experience, it could take you 4 months to build an account. Maybe one day, maybe a week, you could destroy it all. And now your expenses aren't stopping, but you've blown up. I know a lot of people like that. 2020 brought a lot of greed. 2021 just took them all out because like it was bad.
Yeah, and
Yeah.
that's where it can get really scary, right? And I think yeah, you got to be very confident and very, like, I commend Mo, Mark, like, you guys do this kind of stuff, and not having a job that helps keep that comfort and pillow underneath you, it's quite scary in the trading world. You got to be very confident in what you do to do it.
Yeah, I have a job. So just to be
Okay.
clear,
Fair enough.
yeah, because I did, it was 6 months, a 6 month period where I did have a job, and Mo does recall. I mean, look, I did make money. It was but it was a roller coaster. It's not consistent, like you were saying. Some days it's $5, some days a couple $100, but it does bring on an additional amount of stress sometimes that can cause you to make bad decisions, or makes you think that you have to force a trade even though there isn't a A+ setup. And Mo and I have been talking about this, like, stop falling for this, quit your 9 to 5 and become a trader. Like, stop that. Like, it actually helps you to have some sort of guaranteed income coming in consistently. I was very fortunate. 6 months online, someone offered me a good amount of money to come to work for and still be able to trade, similar to what you're doing. So that's different. Mo was like 100% trader.
Yeah,
I honestly miss it sometimes. Like, I'm not gonna lie, it was the easiest money I've ever made. Trading is not the easiest money I've ever made. The job was, like you get benefits. You kind of like, a lot of people think when you work a job, your boss like comes like physically assault you, or like doesn't let you take a lunch break, or like you can't, like most good jobs, they're very like they will make sure they respect you. They give you autonomy, like they let you do a lot of stuff you could do in your business, and it's a guaranteed paycheck. Like sometimes like miss hanging out with the friends and like having like a shared goal. But like that's, me and Mark have talked about this, like a lot of it is you look down upon people that work a 9 to 5. I know so many millionaires
Yeah.
that have built their empire from working a job because they had something going on the side, or they were investing, they're doing something on the side. And for all of you, you guys understand, you getting a mortgage, buying investment properties, it's so much easier when you have a job versus when you have a business. They look at a lot of things. They want
Mhm.
consistent income. They don't like commission income. So there's so much other stuff that most people don't understand.
I agree. I think that having both sides, especially if you're still learning and you still want that comfort, it's important to have that. Going out there and putting all your, you're putting your life savings or putting portions of it in there and trying to be successful. There's a lot of pressure, and you don't want it to feel like a pressured environment. I think that's what I try to avoid as much as possible, is avoid trying to make it pressure, right? If you're doing it yourself, you're trying to create a pressure filled environment, then that's on you. And I think the better approach is to be risk averse and just know when to play um, with what you got. So yeah.
Yeah, that's the only question I have there, Mo. Amit, I really appreciate you coming on.
Yeah,
Mo, you
thanks,
got
man.
anything else?
I
Yeah,
appreciate being a part of it. Hopefully it was helpful. So
yeah, absolutely. Don't leave yet. Let me ask you this, because
oh,
I'm going to cover something real quick. We have a
sure.
few minutes. I want to cover something. Mo has forced me into doing this, so
Yeah.
not
Okay.
necessarily forced me, but so we talked about calls and puts, which is what you guys are successful at. There's also other strategies like vertical spreads, iron condors, cover calls, cash secure
Yeah.
puts. And moving forward, I'm going to talk a little bit more about that. Yes, I usually do the investing part here, but I have been doing cover calls and vertical spreads for the past 7 months, and I've been pretty good at it.
What's your
I
success
don't,
rate?
huh?
What's your success rate?
So far, so since November to now, I've taken, today was actually 16 trades, 3 losses on the vertical spreads. Now, I want us all to do this. As for cover calls, I've done multiple. I've only had 1 loss. And I did a cover call video on my personal channel, so you guys are more than welcome to go check it out. I kind of run through the whole scenario on how to do a cover call. It does require a lot of capital, but I would recommend start with paper money and then find stocks that are under $10. For example, today I did Snapchat, crap company overall, but it's what I've been really good at is finding companies under $10 that have been beat up significantly, whether close to the 52-week low or near it. And I just kind of understand volatility and people's like psychology. Sometimes people see certain stocks, they're like, oh my God, it's down 98%. I gotta buy it. And then people end up buying it, and I'll take advantage of that. Not a recommendation to do. There's safer ways to do that. I taught one of my friends who has a big account. He's got over $100,000 to trade with, and he uses about $50,000 a week to do just Apple. He gets himself 2 cover calls, 2 cash secure puts, and he profits about $1,000 to $1,500 every single week. So a lot of people don't have that. So understand. That's what I was saying. To start off small with companies that are below $10 and try to find relatively good forwards. So right now I have Ford and Snapchat. Those are the ones that cover call. But I want to show you guys a strategy I've been practicing. And there's multiple different ways you could do vertical spreads, literally, and iron condors and various different ways. You have to figure out what works best for you. But I'm going to show a strategy I've been practicing for a while. I'm going to pull up my paper account, and I would like you guys to do this with us. So moving forward, we're going to do one of these trades together. I'm already in it. I did it today before the market closed. And tomorrow, I want you guys to take the same trade on paper money, okay? Paper money, just to show you how this works. And it's on SPY. So let me share my screen here real quick. Yeah, and it's just a compound effect. So it's a little bit of money at a time, and you can. I've been doing it on dailies though, with SPY on the dailies. And the best way for me to give like the real calculation is really the day of. What I've been doing typically is I'll wait until 10:30. We know around 10:30 the market sometimes maybe reverses, especially if there's like a massive run. Let's say we're up 1.5% on SPY. By 10:30, we know that most likely it will probably stay around that range or sell off a bit. And then I will look at the spreads and see one that I can get into where I will be $3, $4, $5 above where we're at, and then just do more contracts on it. But the more contracts you do, the more money you have to do those contracts, but your probability rate of success is around 90s. So it's kind of almost kind of guaranteed, but not, because those 3 losses I had, those were days where it just completely ripped. Like it was like at 1.5%, and then all of a sudden some news came in, and then it shot up to like 3%. And I exited out there before it happened. And I think it was on Fed days too. So I would actually recommend don't do it on Fed day. Yep. And that's pretty much all I got. You got anything, Mo? Any questions?
Nope, we're good.
So I hope that makes sense. And we got a good announcement too, right, Mo?
Yeah.
All right, guys. So moving forward, Money Market Truth will no longer be on this channel. We will be. That's 100.